Okay, taking a look at some oil stocks here. This is Exxon to try and piece together what I think is setting up for the long-term big picture in crude oil and these crude oil stocks, which right off the bat, I'll tell you is I think, kind of a temporary pullback for this year. Uh, and by pullback, I mean a pretty hard crash. What'll feel like a pretty hard crash. Look at this Exxon. Okay, this is 1983 right here. So that was when the peak in interest rates and Volcker started his, well, I guess finished off the inflation scare back then, and you got this big run up, and Exxon kind of followed all these long duration assets. The same thing with treasury bonds, so Exxon did the same thing as a treasury bond. All these stocks did it. You can look at anything, Coca-Cola, IBM. In fact, look here, they're all the same. I mean, you got do some KO, knockout here, Coca-Cola. Look, I mean, same thing, right? You had that run up, okay, in starting in 1983. So right after 81 peak, and all these stocks did the same thing, right? You had a nice little consolidation here, a nice little one with that nice tightness up in here. Real tight, okay? And then you got the breakout, okay? And that was in right around the same time here. Everything did the same thing, okay? So 2012 is when Bernanke started that QE whatever, 2 or 3, right? Okay, so everything did the same thing here, 81. But I want to focus in on these crude stocks. Go back to Exxon here, all right? Yeah, I'm thinking that we've got a real significant pullback coming here, and this is why. You can see this breakout right here. This is a nice little breakout, okay? Nothing wrong with that. And then this tightness right in there, okay? And then you get the breakout above. So, but what's abnormal, I would think, is to just assume that this thing goes right on up into 125 bucks. Okay, this is a monthly chart, by the way, a 1 month time frame. So each candle is a month because I think it gives a better longer term view of what's going on. I'd expect, or, I wouldn't be surprised if this thing comes down, over the summer, over the course of the year. And that makes sense because, Jerome Powell, when they talk about getting inflation down, what they really mean is getting crude oil down, the price of crude, right? They don't care about what stuff costs at Walmart. What they care about is food and energy. That's why CPI is X food and energy, because they don't care about anything else. So their basket of goods, it's all hedonically adjusted. It doesn't matter. What they actually care about is crude and food, all right? Crude and food. And that's always been the case. Whenever crude gets too high, the standing operating procedure for the reserve currency of the world, which is us, is to get crude oil down, and by raising interest rates and crushing our own economy. And that was kind of the name of the game for the crude oil producers. That was done for, call it Saudi Arabia, so that they could have. They're giving their crude, which is energy, which is life. Okay, they're giving it in exchange for dollars, so they're getting an excess, a surplus of dollars. And so if we inflate their surplus away, that makes them angry, right? And so that was the whole deal. So let's see this Exxon. I don't think this thing just zooms right on up here. That would be unusual for me. I've never seen that before. So take it back to everything else. Look what happens when you get breakouts. Okay, you always get, like, look at this thing. Okay, you get a breakout here, right? Okay, but then look what happens. You get this kind of a pullback closer to the breakout thing, right? So, you know, That's you generally always get that. Look at this one too. Okay, so here's this breakout right here. Okay, you get this pullback right to the breakout level. Okay, and so all these, let's go back even further just so you can see. Okay, look, here's something. Okay, now look at, okay, here's the breakout. Okay, right there. And then look, you get a little one. This was a short one. You get a short pullback down here further out in time. So you do have this, that is about, 8 months to a year where you get this pullback, okay? But guess what's going on here? So there's the evidence that you're generally going to expect a pullback and not just some kind of a breakout and zoom up without some kind of 3, 6, 9 month little pullback. But here's the issue. Look at, I mean, look right here. Look at this red line right here. That is, you've never gone below that. Price has never gone, it's always been way, way above the moving average. So that is your 200-month moving average, okay? That's this right here. You've got space in between there. This was, again, this long duration trade where the stock just went up and up and up and had all this space in between the moving average. There was demand for this stock. Okay, and look what happens here. Just, you know, for the first time ever, this broke. Okay, so I think that this is, and it traded there. It didn't just break and rip right back up. You had a little, this W thing. I mean, so you had some real reaction down here to this break. But look, I want to think that this price break right in here, that this means something significant. Uh, what I want to believe, what I tend to assume this means, is that this long duration trade, all in here, all this just riding up and riding up and riding up and riding up, that there's the potential for this to be broken. I mean, look at this. This is 2007, 8-ish. This Exxon has really just gone sideways since 2007, 8. Okay, 2008. That's, 14 years. Okay, 12, 14 years, over a decade, almost a decade and a half, where it's basically gone nowhere. I just, okay, what could make that wrong? What could make this wrong that, we don't get some kind of pullback? If we're really in a low, peak cheap oil environment, if we're really there, then hey, I mean, yeah, this could really move without any kind of a pullback. But look, I don't know. I tend to think that this means something, and that we're not in some kind of environment where crude is just gonna take off and all these crude oil stocks. Let's check out another one to see. Let's go to the next big boy here, Chevron. Chevron. Look, I mean, you get kind of the same thing. Okay. You get, again, the long duration move up since 81. Okay. Again, this is the same thing. Well, this one started late. Look, 85, 87. This was a good one, by the way. Look at that. That was your key right there, that tightness in price, and then, your breakout. And even then, you get the pullback to this breakout level. Okay, you got the pullback before it just took off there. So again, I always kind of look there. You got your breakout right here. Okay, and again, you got to pull back closer. I mean, it did take off for, count it. That is, we'll call it 2005. We'll round that to 2008. You got a 3-year run before it pulled back in closer to this breakout level right there. So again, let's see if this doesn't, look at this big red thing here. It kind of looks you know, a little bit like it wants to come back in. 100 is a nice round level. So, and that's a lot of volume right there. Look at that. That's the highest volume month ever. Okay, where's the last time we had this kind of volume? Here, and look, you got that top, that temporary little thing for a pullback, right? So look, I think that's what's going on. I think crude's going to come in, okay, and that makes sense, right? Because again, the Fed wants crude to come in because it's literally their reason for existence is to make crude oil good for dollars, okay? It's to keep the crude oil inside the dollar market, okay? That's their job, is to keep crude contained within the amount of dollars outstanding. Let's go to Conoco. Yeah, Conoco. Okay. Let's see. You got, that's, kind of the same. I guess, look, long duration trade. But look what happened. Conoco hit here. That's much before the other ones. Okay. That red line, right? So, a little different, but kind of the same general attitude. Okay, look what happens in these big volumes. Okay, big volume, and then let's see, so far it's incomplete yet. Now, what happens here? You get, that's wrong. There, right? If you go straight, the peak on volume kind of happens at a top-ish. That happened at a bottom, didn't it? Look at that. So, interesting, right? Interesting. So look, this could mean that, yeah, we did start a new long-term bull phase, which I'm assuming, but I think there's still going to be a pretty bad down move, right? I think that's the general idea with all these crude stocks. Let's go to Schlumberger. Okay, let's see if we can. Yeah, look, this gives more evidence to that, right? Let's check it out here. Again, you got the long duration move, and then obviously Schlumberger broke down right here. So, it's never broken. It tagged this red line here and then here. This was all demand for the stock coming in whenever the price got low. And then right here, you had the big whoopsie. It's just supply came in. Something happened that caused the market, us, market participants, to not want to continue to buy this stock. Could be something bigger, could be interest rate cycle, could be the debt cycle, could be the money system, I don't know. It could be that, this is what it could be. So this is a driller, right? They drill for the oil. It could be that all the majors, the integrateds, the exploration companies, they're cutting their capex for drilling, and that's going to be a long cycle thing, but these all kind of tie in together. You're not going to have these oil companies continue to go up and up and up in value if they're just depleting their resources without gaining new ones. I mean, these things are companies. They don't just trade off the current price of crude. They gotta refill the coffers, the reserves. So they gotta look for new oil. That's part of the value of the company. And all this stuff going on with the ESG. I mean, these guys are really starting to think, hey, are we just gonna get killed by the Western governments, who want us to die and go out of business with this ESG stuff? So they got to be thinking to themselves, what are we going to do? What does the future hold? Because it has gotten out of hand. All right, so look, what would make sense to me is if you get this rally back up to this breakdown level, right? I mean, this $50 was a significant level for Schlumberger, all the way going back to 2006-ish, right? 2005 or 6. So, what would be unusual is if this thing just blasts right on through without any kind of stop. That would be unusual. I mean, everything in the QE era has really done that, but it did it from these levels here, okay? It just blasted through resistance there and it blasted through there. I mean, it was doing this all since 81, where you would have a resistance level and it kind of blasts through and you get some, again, right, the pullback, okay? But then look at this. You get this thing and it just, well, this is a nice tightness right in there. See that tightness there? That's nice. So then you get the breakout, but again, eventually, a couple years later, you get the pullback, okay? So it's unusual for a stock to just blast on through and never get a check back in. Usually, you're going to get a check for guys to take profits. All the guys, there's traders that are going to take profits in here. It's just going to happen because not everyone is operating on the same time frame. And then the big players who really want to own this stock at 50 because they have a 10-year view, well, they're going to come in and start to buy down here at 50, which is eventually going to, once they soak up the supply and time passes, there's not going to be any supply of the stock. And if the reality conforms to the perception of the market participants' view of reality, which is a higher crude price because there's higher demand for crude and less supply coming online, then eventually, the earnings are going to catch up, and eventually the supply of this stock, Schlumberger, is going to get soaked up, and eventually, given enough time, the price is going to have to move higher, okay? But it takes, the passage of time. Time has to go this way. So it's just highly unusual for a stock to just blast right off after a significant long-term break like that, right? So I'm looking for some kind of down move in the Schlumberger, right? I don't know to where. I don't know for how long. I don't know how much time, but you got to look for some kind of down move and be ready to kind of put on some size if we do get something, or it could be real choppy too, before the eventual kind of move. All right. So look, let's look at another oil. Let's look at what do they got here? What about some of these smaller ones? What about a nat gas? What about Ranger Rick? Okay. Range Resources here, RRC. Yeah, same thing, right? Look at this. You get, I mean, that's a big down move. Okay, but you know, the guys are really gonna just be coming in here guns a-blazing to buy this thing at 36 and a half? I don't know. I'm not. So what would you expect to happen? You'd expect some kind of a little something. Maybe it's here, maybe it's here, maybe it's down here, and then you get a real big one. But you got to expect some kind of a pullback here where the buyers just say, yeah, you know what? This level, I'm not going to be a buyer here. Where the big money says, yeah, this is not right. And the guys that bought in here, the big money that was buying this move down, because look at all this volume. There were guys selling and there were guys buying every single one of these transactions. So the guys that bought in here, and all bought in here because they said, this is crazy. This is one of the largest natural gas producers in the country. There's still demand for this stuff. How are we going to turn on the lights? The guys that are all buying because of that, well, now they've got, say the average price is somewhere in here, 750, call it under 10. Heck, call it 10. Give them 10, that the average price is 10. Well, we're at 30. So you made a good bit of money off your $10 investment, okay? You got a 200% return. So, look, sustainable moves, I like this. Sustainable moves, up moves, they got this tightness. I mean, see that? See how tight that is right in there, that tight little price? Okay, when you get a little bit of a down angle, all right, then you can have these sustained moves up. So, I mean, there's just not that kind of tightness in this price here, you got these little, it's too sharp, right? You got this little thing. It's not this nice long tightness. These tend to have more sustainable upside moves. So even if you do get a thing like that, it's doesn't seem to me to be very sustainable because there's not enough time for it to be consolidating like this. The consolidation is good. Why? Because you got a lot of churning. So when you churn, what happens is the guys who want the stock, they're buying in this churn. They are buying and buying because they got a long-term view. And they're buying and buying. And the guys who don't know what they're doing and they're just trading around day trading, well, they're selling and selling and selling little moves, and they're operating on a different time frame than the guys who are buying down here. Okay, they're just different time frames conflicting. And what happens is throughout all this passage of time, when guys are battling in here, the bulls and the bears, and the bulls who have a longer term time frame turn out to be right, okay, because they're smart and they got a longer term horizon and they're patient and they're smart. They got to be right, all right. Then all the supply of the stock is gone, and you get this because the supply is gone. There's just no more supply. You got to go up before all the guys who are buying in here finally say, yeah, you know what? This is what I was expecting. I was expecting a $70 stock because they were going to ramp up production and Range Resources was going to be drilling all kinds of nat gas and then building pipelines were going to get built. There were no pipelines back in this time. There was no way to get this stuff out of the Marcellus, right? We were importing nat gas during this time until Cheniere made the plant. They reversed the plant to instead of import to export it. So all these guys who are selling are saying, yeah, this thing ain't going, this thing ain't going, because there's bearish stuff back then. But the guys who were buying, they weren't buying it all at once because they're like, hey, this could be bullish. This guy is changing his export plant. He's changing it. Maybe I should buy. Maybe this will turn out good. They don't know for sure, but they're patient and they see the possibility. And then, sure enough, it happens. Range Resources gets everything together and they start producing a ton of natural gas. I mean, they were losing money all the time. So, but it happened that they became a big producer, right? They had a bunch of assets then. And so they happen to be right. Now the same mentality plays out all in here. These guys are going, yeah, they're still a big producer, they're losing money, but it's worth something. Now, are those guys really going to be gung-ho to continue buying this into 30, 40, 50 bucks? It's probably unlikely, okay? So I think, again, this gives weight, some more evidence to the idea that we're going to get some kind of a pullback, pretty moderate to nasty one. And then eventually, if we're right in the long term and that all the crude oil is kind of used up in the world and that demand from the emerging markets is going to come in, India, China, those guys, they want to live like us. They need energy. So unless we got nuclear fusion or something going on from DARPA, we're going to need this energy. So it's going to be in short supply. You never want to buy, as a side note, when there's news like Russia is cutting off nat gas. That's generally not the time. That's the time you want to be saying, okay, I was right, and letting some go. Generally speaking, that's my view because I'm a contrarian. I was just born that way, and I came into the markets in '06, '07 when I saw all the hype going on, and then I learned very quickly that the markets and what you see on the TV is not always true. And what people are writing about the markets, it's not going to help you. Okay, you got to come to your own conclusions about what's going on, bet your own money, and learn from it. All right, let's look at another one here. I like these crude oil stocks. Take this one. Guys don't know. I like this National Oil Well Varco. This is really showing you, I think, what is likely to happen, okay? I think it's just showing you where we're at in the bigger picture. What would you expect? This to happen? Or, maybe something like this. Then this, right? And then maybe a this, and then, okay. Because this is a good company. I mean, look, these guys, they make uh, they make those rigs. They got the automated roughneck rigs. They got all kinds of stuff. I mean, in the North Sea, they make stuff that you need to drill oil out of the ground. Okay, uh, everything is pointing towards. Let's go. Let's go. What about the USO even? Or what is Crude doing? You got what's Crude? WTI? Nah, let's go to the USO. Okay. Yeah. Right. This isn't an exact replica of what's going on, but again, okay, so look, that's a significant, you had, you set a level here, right? A significant level. So that's interesting. And that is an interesting little close above on good volume. Okay, so that's cute. All right. And maybe you get some kind of this, or maybe even just a sideways move and then up, right? So again, everything is, it's unusual that you're going to get, starting from here, really, just an up move. Here was the last consolidation. Okay, you want to see a consolidation that goes like this long before it breaks out. That would be more convincing that this is going to not do one of these and instead just do one of these. If it had a nice long consolidation all through here, but guys churning, churning, churning. Again, look at all this churning, churning, churning. You like that churning because it gives the dynamic of weak hands selling, strong hands buying, if you're looking for a long sustained move. Okay, here we don't have any churning. We just have these rips, which is unusual. I mean, anything could happen, but I've just never seen rips that keep on going. Okay, even when you get a down move, it consolidates. Okay, you get a down move and then it consolidates and you get a down move and then look what happens. It just rips. It's not usual. So something is going on here. Something has happened. Crude is going to be a place to be, because look, this something different happened there, especially when it got negative. Something happened. All right, so you want to be alert to that something changed. Again, go back to this old Exxon here to see that something has obviously changed, right? Look, this means something. Something changed in the oil markets. When stocks do stuff that they've never done before in 40 years, it means something. You got to take note that this long duration trade is over. Could be. Uh, there's going to be opportunity here. We don't know what exactly it is yet. I don't think that your opportunity is just going to be to pile in at $85 and watch Exxon go to 125. Maybe. Listen, maybe you don't get any kind of pullback and this slowly does this, and that's all the consolidation you get. Maybe all we're looking for is like these types of consolidations, right? So it would be something like that. So call it your time frame then would be 2020. What is that? Let's see, this time frame right down here, everything is moving in 2-year increments. So 2023, is that right? 2023, yeah. Look, you could get maybe this is what we should expect. Is this kind of consolidation there? Maybe we don't get a this, right? Maybe we just get this, okay, and then this. So again, check your time frames though. Look, even if we go sideways, you're talking about the very first quarter of 2023. All right, so where are we now? We're in April, almost May 2022. So yeah, you got the rest of the year here to just kind of hopefully churn this out, just kind of grinding away, grinding and grinding and grinding away. And then you get the same kind of dynamic here is that guys who were buying, for the short-term rebound sell. So those guys will be selling. And some of the guys who were buying, in here saying, hey, I think I'm going to hold this for a longer term time frame. They come back in and start buying in here, While the guys who say, hey, I just wanted to get a snapback and make my 5 to 10% on leverage, are selling in here, right? So let's watch this because something's going on in this. Again, base case that we got to operate on is that you're going to get either a sideways or a down, right? It would be highly unusual to just get that and that and that and it keeps on going. It's unusual. All right, and let's do one more crude oil stock that I want to do here. Let's see one more to give us a real, I know. How about this one? Let's do Southwestern. That's a nat gas. Let's see what they've got going on. Yeah. So you can see the difference here, all right, between the crude oils and the nat gas. That thing just went. Again, look, here's the example. You want to see this. You got that, and then you got this tightness in price. You want to see that tightness. Okay, look, ooh, boy, oh boy. That sure counts as some tightness, doesn't it? Doesn't it look like some tightness there? Yikes. Now, this one's highly levered. This is like, I believe, yeah, they're one of the more leveraged ones, so you want to be careful here. But look at that tightness, man. And good grief, that's some volume right there on that breakout. Yikes, man, yikes. All right. So this makes you want to not get too married to this idea that we're going to get some kind of boom. Maybe you do want to pay attention that maybe we only get like a little bit of a little one, right? That's something. Now, okay. Yikes. And then look at this one here. Look at this. I mean, there's that, and then what if it's that? Man. Yeah, this could really be the start. Something changed, okay? Something changed in here. And again, something changed in this area in here with crude. Something is going on. There's a different dynamic. Just look at this dynamic here. You had this run up, a nice tightness, okay, with this nice base. And that's your classic, Bill O'Neill or even Mark Minervini gives the real nice description of what this is and why this works. Okay, as you get the nice sustained move. What is that kind of a move? That's the move we're looking for. So that's $2 to 18. Listen, you only need one or two of those in a lifetime. I mean, and you're talking about, one or two of those would do you for like maybe 20 years, right? If you were in size in this thing. Imagine if you had 50 grand in this thing at $2. Okay, and you made it to 18. What is that? If you had that, look, if you had 18, wow. You 9x'd, so if you had 100 grand, you would be 50 grand. If you had 50 grand, you'd have 450 grand, okay, after, what is that, 2004 to 2006? So if you manned up and you put 50 grand in there, which is like a life savings for some people, okay? Or maybe it's 50% of your portfolio, right? Maybe it's 100, okay? You would now have 450,000 in 2 years. So that's not chump change. That's significant. You only need, you do that twice, you've got $900,000. You could do that if you did one of those every 4 years. You've got $1 million after 10 years, okay? After 8, right? So you could be almost a millionaire in a decade if you play these stocks right. So let's try and get there. You got potential here. there is the potential for one of these, okay, but I don't know. I'm suspect that I have my suspicions that this is long enough consolidation. Look at the length of this. This is a 94 to 2004. You had a 10-year consolidation. What's this consolidation? 2021 to 2022. This is a decade-long consolidation. So I don't think you're going to get a straight up. I think maybe you just get this and it rides up this band here. Maybe, and it takes you a while to get there, but this is where the action is going to be, okay, is in these crude markets. So later on, we'll look at some, what do we want to look at? Some little junior ones, some, more wildcatter operations. Like maybe we take a look at, like, what's Pioneer doing? Huh? Pioneer. Oh, yeah, say, look at, yeah, look, I mean, what do we see? What do we got? I don't know. A straight up move? Man, listen, you gotta temper your enthusiasm. What if we just get more of this for, a couple of years until we get one of these? That would put us at 2025. Let's temper our expectations here. But, man, what can you even do? What's going on with all this? Why all this selling in here? Why aren't guys accumulating this? They are here. I got a green cluster there, another green cluster in here, okay, and the latest green cluster. Maybe that's the environment we're in. We got to be careful of that too, that you just get these moves, a little flaggy kind of a consolidation. Maybe our consolidations are just getting shorter, okay, and we just stair step the way higher here. So that would be, that's going to be tricky. I hate those because look what happens when you get those. If you get these, look what happens. You tend not to get those sustained moves higher. They eventually go haywire, right? And you get that. That's not what I'm about. I can't operate it. You only get these couple of month bursts and price higher. That's not what you want. You want those nice consolidations with a tightness, okay? But look, we got no tightness. None. Got to look for that tightness. What's another one? What's Devon doing? Devon Energy? Yeah, see, there's no tightness here. I mean, good grief, man. You just got no tightness. There's none. I don't know. I guess I see that breakout, but what are you going to do there? See, what's better is when you get a little bit of tightness here, you got a nice area where you can define your risk, and say that, well, this is my risk. So if the stock comes down, I'm out. Those are much better than these ones where you just get a little pullback, because then you got a tough time. Where's your risk? It's too tough. Too tough, Got to see some tightness in this. Or what would be nice, let's look for the ideal. What would be nice is you get a pullback to a nice obvious level. Because look, this is a pretty obvious level. That would be nice if you get a little bit of a thing there. Then you could say, well, this is my risk. All right, that's nice. Look at this volume in Devon. Good grief. That volume's kind of going like that. Well, the price is going like that. Yeah, I don't know what that even means. It's not consistent. Okay, let's do another. What about Marathon? Marathon oil? Man, nothing. You can't tell, right? I can't tell. I want to see, look, this is what you want to see, like this kind of a thing. Even this would be better, because look, you got this, and then that kind of a tightness in there, and then you can identify that as your breakout, because then you got a nice little, hey, pile in, and if I'm wrong, I'm out. If price goes back down to here, you got to see that tightness to put on size. I mean, you could do anything you want to do, but in order to put on size, you got to have a stop, because you can't take, you're not going to get anywhere just taking small positions. You're really not going to make meaningful improvements in your living standards without size. And it's difficult because, yeah, if you're wrong, you're going to lose everything. I've been there. It's not fun. I mean, it's not fun living in your parents' basement, okay? So, you got to put on size. And you can't do that without a tight area to kind of show you, what tightness gives you it just gives you a nice area, okay, to put your stop so that you can put on size and hopefully capture one of these. Because again, look at that. What happened if you put 50? Let's do something. What if you put 25 grand in here at 650 in 2004? And so from 650 to 30, so call it almost a 5x. So if you put 25 grand in here, call it a 4x, right? 2004 to 2008, in 4 years, you almost 4x'd your money. So you're getting 100% return every year. If you do 25,000, you just made 100,000 in 4 years. That's like, you can get yourself a house, down payment on a house plus a little extra, for a car. I mean, that's decent. 100 grand, imagine you did that 10 times in your life, So then in 40 years, if you did that every 4 years, in 40 years, you'd have $1 million if you didn't spend anything. 40 years, if you're 25, yeah, you'd be 65 with $1 million. That's not going to do you anything. You got to do more. See, 25,000, you got to have more size on. You got to do that a couple times. 4 years, man, $1 million in 40 years. We need some big moves. That's how tough it is, really. You got to get everything on your side. It's really tough. Let's do another. Let's check out another one. Marathon. What about Oxy? Oxy Pete here. They're not the good ones. They used to be good. Yeah, see, look, what are you going to do? You're going to, I don't know, you're really going to pile in here? It's just not, look, even if it doesn't work out, if you get a nice tightness, sometimes they don't work out, but you get that tightness there, you can at least do that and get your stop, okay? And then sometimes it doesn't even work out, but, at least you're not losing anything and you can move on and learn something from it. So, Oxy, let's do another. What about Hess? Hess. Look, what are you going to do? Is this, I mean, look at that. Good heavens, man. Hess is just, where's the tightness in price that shows a nice battle between the bulls and the bears, and guys with different time frames selling their stock, and guys with longer term time frames accumulating the stock because they want to hold for a long time. I mean, I gotta figure it does something like this. You just gotta play the odds, and the odds are not in favor of that, really, are they? Doesn't look like it to me. Could be, anything's possible. But man, it just doesn't look like that's the one. What about another? Hess, Devon we did. What about another? What about what's an oil stock that we haven't done? What about some like Total? What do they call themselves now? Where's the French? Not Total. They call them something else now, didn't they? Oof. I know. What about Royal Dutch Shell? RDSA? Shell. RDS. What is it? Dash A? Where's Shell? Ah, slash A. That's the one. Nope. Euro next. Where is RDS? That's a Mexican. I just want Shell. RDS. What on earth is it even? Ugh, none of that is it. Is it .A? Look at this. Royal Dutch. Yeah, I don't like this. I'm just going to do this. Just give me this RDSA. Yeah, Shell. That's not right. Why can't I even get Shell? We got to find Shell. I like Warden. It's simple. All the ticker symbols are simple. It's just RDSA. I want the Dutch. The Dutch RDSA. Why is this a Mexican one? Oh, what about BP then? Honestly, NYSE. There's got to be. Where on earth is Royal Dutch Shell? RDS, Leverage 6, Futures, Forex. Look at this. Royal Dutch Shell B, not interested. Swiss. What's the Swiss? What is it? That's some bond. Look, I don't like this at all. Here. Royal Dutch Shell. Oh, I don't like this at all. Give me Amsterdam, Paris, Amsterdam. That's okay. Amsterdam. Nope, 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 nope. Euronext? No. Shell PLC. Euronext Amsterdam. That's the one. Let's see. Yeah, there you go. Found it. Look what happened here. Good heavens, man. Look at this. Look at that. You want those, right? My goodness. Again, same time, a little bit later when Volcker did all that. Look at this. You got that tightness and then just a real live kabooming. Okay? Man, you didn't even have the confirming volume, really. There wasn't a big volume spike. That's crazy. Now look, this stock has done nothing. I mean, look at this. What 2000, it's been 20 years. Okay, and look where we are. You got 20 years of sideways. You want these, gentlemen. If we can just find where this is going to be, the next phase of this, we're going to make it. I mean, we're going to get ourselves there. This was all because of Volcker, started a duration bull market by crushing inflation. I just don't know where we're going to get that now. Maybe it's not crude. It's not looking right. If we do this, it's looking like it's unlikely to be crude. You want to get these, but look, you could have done anything in that time frame. Look at Procter and Gamble, okay? You could have done anything, and you would have made that duration trade. Look at this. Again, you see the thing we're looking for, right? A nice one, and then a nice tightness, okay? You see how it gets super tight in here? And then, boom, you get that. And then you can just, sit back and, I don't know, go fishing or something. But you need this environment. I don't see it. I do not see it. And look what even happened. Everything kind of slowed down after 2000, right? Look at what happened then. You still have the same thing, but it wasn't as long of a consolidation. You get that nice tightness. And especially, see this tightness all in here? That really nice tightness, and then a little tightness again, and then you got it. Okay, you got to move there, but it wasn't anything like this. That was the time to be in stocks. All right. Now, look at the moves you made. 70 cents to $30. Okay, you're talking over a 30x your money in 83, 82, right? Again, when Volcker started the duration trade to 2000. That's 20 years. I mean, you 30x your money in 20 years. I mean, that's a generation though. So if you were 25, 30 years later, you're 55, you 30x'd your money. I mean, that's, that's a long time. That's a long time to be in these trades, and I don't know what the likelihood of us getting that is. Okay, but we got to find the next one and be in it. Okay, you're just not getting this 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 consolidation anywhere. See how it's got a down angle? You want that down angle. That was like a little down angle that gave you a bit of a move. You never lost anything, even during 2008 and 9. This was the flash crash, by the way. 2010. Yeah, when Procter and Gamble, Kramer was on TV saying he'd buy, 250,000. Like he was saying, like 28 and a quarter bid for 250,000 Procter Gamble or something, or 50,000 shares on it. That was good old days. I mean, those are, you know, you're not getting that long. It's just not here, right? I just don't know what the likelihood of this is, of this just going like that for another one of these moves. Not gonna get it. I don't know if it's oil, right? Let's do one more oil stock to see. Let's do one more. We did Chevron, Conoco, and Exxon, the big ones. We did Shell. Let's do one more. What is it, BP? Let's check out the big one here, BP. Look, yeah. Yeah, gotta find the trade that's gonna get us there. Gotta find the trade. Don't know if it's this stuff, right? So what do you expect? I would just expect this thing to keep on going. Right around 20, a couple bucks below, a couple bucks above, but really just $20 stock, until you can get, you gotta look for, see, look at this one. There's what you want with a tightness, okay? And a tightness that kind of goes back a long way. You want that. And again, where did that come out? 85-ish, 1985. And then you get a move, okay? We're looking for something to give us a move, okay? Gotta look for some tightness. Gotta get there. And when it happens, I mean, you gotta pile in, right? You gotta be in size and then put your stop, so that you can take advantage of these moves here. BP. What if there's one more? Try and take a look at another crude. What about what happened to the old? What about rig? Is that still a thing? It sure is. Rig. Yeesh. Come on now. Look what you got going on. I mean, yikes. Okay. Now, what do you expect to happen here? Guys to just pile in and get ready for this? Could be, but I doubt it. I'd expect something else, maybe something sideways to break that. Crude is basically, it's got potential to give us what we want, which is, a nice long 1981 long duration style trade, but it's not looking like it yet. Not looking like it yet. All right, thanks for watching Paul Power Merchants. Good luck out there.